So in my practice, I charge $750 to $1,500, depending on the complexity, and then I submit the offer for them. It's just filing a couple of pieces of paperwork, as you will see here shortly. The first and foremost important thing of this is to make sure that your client, or yourself, if you're doing this for yourself, that you are in full compliance, meaning all returns that haven't been filed, go ahead and file them. And how you do this, to find out, you call Practitioner Priority Service. We have topics on these. Go ahead and watch these videos as well so you can understand how to deal with it. Before you begin reviewing the offer and compromise video, please make sure that you have already reviewed the IRS collections, because we talk about Form 433A in that subject there. So please pause the tape or stop it and the video and just log on to that segment there. View that first, then come back here. Okay, let's go ahead and begin. And before you begin, here I am telling you, please print and read the following before you begin. Again, pause the tape, click on the link. It will take you to the IRS website, and print. It's going to take a while to download the entire manual about the offer and compromise. Print it, read it. I know, grab a cup of coffee, grab a cup of tea, read it. It's very important if you want to prepare offers and compromises for individuals or businesses. Okay, I would assume by now you have printed everything, you viewed the IRS collections, you have viewed the IRS compliance, you understand about Practitioner Priority Service. So let's go ahead and begin. There are two reasons why an offer is submitted to the IRS. And the first one is down to collectability. What that means in a nutshell is, if I take my disposable monthly income, as you watched in the IRS collections, the last page, page 4, I think, of the 433A, times 48 months, plus my liquidated assets at 80% of fair market value, minus any loans outstanding on them. You add those two figures up, and that is what I can offer to the IRS. So if I owe the IRS $10,000 and I add up my monthly disposable plus my assets equals to $4,000, that will be my minimum offer. If I owe the IRS $1 million, and again, my monthly disposable times 48 months plus my fair market value of all assets times 80% minus my loan on them, you add them up together, and it's $4,000. You still offer $4,000. It doesn't matter on the amount of liability. It matters on the amount of collectability. The second portion of this discusses doubt to liability. I had a client once who was audited, did not receive the audit report or a 90-day letter, 30-day letter, tax was assessed, and he wouldn't owe this much money, so we went ahead and submitted an offer as to doubt to liability. In this case here, we offered $500. The revenue officer that was reviewing this referred the case to a revenue agent to do an actual audit on the return, and we went ahead, no adjustments were made, offer was put through, done deal. Okay, so much as to doubt to collectability or doubt to liability. Let's go ahead and get into the actual mechanics of how you will submit an offer. To begin with, you take a 433A, as we showed you in the IRS collections segment, and you arrive at your monthly disposable income. So let's go, and then you will need to look at your assets. So from this manual that you printed, turn to page 8. Let's keep it real simple. We don't need to complex this. And I will go down to line 7 on page 8. And it tells you here from line 18A, they are referring to Form 433-A. It asks you to enter current value of the asset. So you can put down, let's say we have an automobile worth $5,000. times 0.8, 80%, we're down to $4,000. That's what goes on the line right next to it. Minus any loan outstanding, let's say you owe $2,000, equals you put $2,000. That's your equity in that asset. Let's assume you don't own anything else. Let's keep it real simple because all the assets are the same. Real estate is the same, jewelry is the same. Cash on hand you can't multiply by 80% because that's actual tangible in your own hands. Now, when you arrive at all this, you will have a subtotal which is at the bottom of the page, refers to M. Turn the page. Here they're talking about line 12. Enter amount from item 34, which is your actual revenue on the 433A. That's page 4 of the 433A. So your total income, monthly income goes here. Line 45, that is your total expenses, national standards, auto expense, utilities, rental, all that stuff goes here. Taxes, you have a difference. Go down to line 13A. You take box O, which is your monthly disposable, times 48 months equals P. Then you have your net assets that comes in from box N, which is all your 80% of the fair market value minus your any loans outstanding. That will be your net asset right there. You put that here, and then you arrive at equal R. This is the minimum amount of the offer to be submitted to the IRS. That's if you're making a lump sum payment or you're paying off everything within 5 months. If you're not, and you're asking for a payment plan, let's say in less than 2 years, then you will take the amount of your disposable income at 60 months. I never, ever, ever like to go with the 60-month, 2-year payment plan. I always like to deal with a lump sum payment. If my client can't afford that, then try to borrow money from your mom, dad, relatives, brothers, sisters, etc. Keep it real simple with the IRS. The simpler it is, the offer, the more chances that your offer will be accepted. Now, let's move on to page 12. When you submit the offer to the IRS, folks, there is a fee. It didn't used to be this way. But because of all the advertisement on television and the internet, settle for pennies on a dollar, the IRS was inundated with offers and compromises, and that's my own opinion. Fees now are asked when you submit an offer. It costs $150. Make sure you or your client make out checks to the IRS in the amount of $150. Then go ahead. Let's turn to page 14, and this tells you where to file your offer and compromise paperwork with the IRS. Very simple so far. Now, let's go ahead and go to the actual offer and compromise form, which is form 656, and that comes after page 19. You will arrive at this page was left blank, and then here is your offer and compromise, form 656. Very simple. The only thing I would like to stress here is, let's begin from the beginning. You put your name, address, social security numbers, etc. Under section 2, let's assume you're making an offer on 1040s, and that's mostly what you will come across as individuals. So you put an X here, and the years. If you are uncertain for what years you owe the IRS, or if you have a client that is uncertain for what years they owe, contact Practitioner Priority Service and find out. They'll tell you that